Morning, everybody. 8:10 a.m., December 8th. It is Friday. It is time for the non-farm payrolls unemployment data. And this market looks like it's going to go back to the most traded price of the week of the month, 45.70, to balance off and wait for this data to come out at 8:30. That would not surprise me. We hit resistance in the Qs, in the SPY, and we're selling down right now. I wouldn't be surprised if we land around 45.70 by 8:30. That's how the market works. And it keeps looking like you're going to break out, but then you don't. So today could be the catalyst. I mean, we're working our way back now to the most traded price. So we have to see. I'll be here with you at 8:30 to see and analyze this data. And without further ado, let's get into it. My name is Steven Gonzalez. Use market profile, volume profile to find structure in the market. We're obviously in balance, and the profile says it. I mean, you don't need a profile to say that. We just been in a range. Also use gamma exposure levels and the most traded price of the year, the month, the week, and the preceding day. All right, helps me just stay on the right side and yeah, not get tantalized by price action. Okay, so if you do enjoy my content, subscribe, set an alert. That'd be much appreciated. All right, you can always give me a like, thumbs up, and you can always follow me on X at Gonzo719. All right, so I mean, these futures watch lists I'm going to go over. Obviously, if this number is really soft or really hot, that would change. But let's just look at it. Okay. All right, crude is getting a lot of love right now. All right, it's up 2.26%, almost $1.56 a barrel. Well, not almost, it is. It's at $70.88. All right. I'm looking for crude to start bottoming out. All right. Really sold off. So let's see. Some people say it's selling off because a possible recession is around the corner and demand will be low, but we will have to see. Bitcoin's up 1% at 44,145. Ether's up 0.51. The VIX is up 0.38. Dollar is up 0.22. Russell's up 0.21. Silver's up 0.19. 30-year bonds are selling off. Not harsh, but down 4.47. So the 10-year yield at 820 should rise. Gold is pretty much flat, holding over 2K. ES is down 0.19. The Dow is down 0.19. The Nasdaq is down 0.38. Okay. Market is waiting for the news to drop. 30-year bonds, like I said, down 0.47. All right, moving on. The stocks I like to day trade in, swing trade. All right, we got the big mover of the day, Roblox. Rosita, she let me in on that little news that Nicki Minaj is joining Roblox, getting a pop. Coin, almost up 1%. Coin finally pulled back to last week's highs. All right. Also, the gamma flip point yesterday was 136. Okay. It needs to hold over that to possibly make. This is the first pullback of this parabolic move. Okay. So have to see what coin does. AMD had a monster day yesterday. Monster. So that's insane. All right. BABA's only up 0.21. All right. Laggards. I'll go to the bottom three. All right. Microsoft's down 0.23. Tesla is down 0.37. I just saw something news about the Cybertruck not being safe from some of its shape. So not sure how much that's going to take really down this stock, but we'll have to see. Amazon is down 0.53. Google is down 0.8. Okay. That's probably got to take a little breather because Google gapped up real high and took off. All right. Well, took off with a gap up and then kind of relaxed, kind of had a rest. All right. So let's moving on. Top sectors. All right. No surprise, Chevron and Exxon leading the pack. Now I did see here, let's see, we got Disney's down 0.32, Qualcomm is down 1.23%. Now, why is that? Qualcomm, I believe, got a downgrade. Let me just make sure of that so I don't make that up. Yes. Downgraded to equal weight from overweight at Morgan Stanley. Okay, so that's why Qualcomm is down. All right, moving on to the sectors. Sectors. There we got crudes up 0.57, and everybody's waiting for this data, right? But weakness is coming out of communications in XLY. That's Google, that's Tesla, and Amazon. Okay, this all changes most likely at 8:30, depending on what these numbers are. Okay, now we can get into that and just look at what we're supposed to be expecting. What I saw some things on Twitter or whatever is that the range of consensus is all over the place. So let's just look at it. All right. So non-farm payrolls, the forecast, official forecast is 160, previously 150. Okay. So again, if you add more, that should be bearish. Okay, it's expecting to add more. Now, that's 10,000. That's not a huge push, right? Now, bullish obviously would be if we come under this number. The consensus is 180, forecast is 160. Like I said, it's all over the place. But if we come way under 160, that should push the market higher, right? Now, unemployment is expected to stay the same at 3.9. If unemployment, same thing, right? Higher unemployment is bullish right now because the Fed will not have to do anything. His restrictive policy is working. If unemployment goes down to 3.7 or something like that, that is bearish. Okay, that means the Fed has more work to do. Right? So, also at 10 a.m. you have Michigan consumer sentiment. So stay away from entering trades, specifically day trades at 10 a.m. You could get knocked out of your position. I would wait a little bit. Okay, that's really what's going on today with news. That's the big news that hasn't happened yet. Okay, market's kind of pushing back down, waiting to see what's going to happen. Okay, certain little newses that came out. There's always interesting when it says 93.2 billion inflow to cash in week to Wednesday, largest inflow since March. That's from Bank of America. 6.2 billion inflow into equities, 51 million inflow to bonds, and 400 million outflow from gold. Bank of America Treasury C, 4.8 billion outflow, largest since August 22nd. Okay, so we just have to see. We're going to wait and to see. Okay, we can go over daily charts. Like I said, there's not much to see. We've really been in balance. We can look at the daily charts together. Let me pull that up for you guys. Give me a second here. Like I said, not much to see here. All right. So basically, we're just in balance in this buy, right? Because if we dive in a little closer, let's get in from this move here, right? Dive in a little closer. Orange, remember my express chart here. Orange is last week's highs and last week's lows. We're within last week. Okay, perfectly within. We're actually having an inside week. Nothing has broke the 4 days. We have not broken last week's highs or last week's lows. Okay, so it's an inside week. Now, this is last month's highs right there. We keep touching that and selling off or closing by it. Okay, so again, look at from here. From this candle, it's just been sideways. All right, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 11 days you've been in a range. Okay, individual stocks could be doing something different than this SPY, but remember the SPY is made up of 500 stocks, multiple sectors. So this is pretty much balance. That's what we've been doing. Okay, and we're right now 457.52, 457.52, kind of right in the middle of yesterday's range, right in the middle of all this pricing, which is understandable because non-farm payrolls is coming at 8:30. The market's going to come back to the magnet, which pretty much it has. Okay, that's what is going on right now. Okay, let's look at the Qs. Qs doesn't have that beautiful like range equal, but it has a bigger range. So from here, 382. See, 382 has been hit a couple times over here, right? We pierced into this gap, and looking at higher low, higher low, higher low, higher low. Right? So the Qs have been making higher lows back into this range, right? And I would say the most traded price is right around here in the Qs, right? So that makes sense, right? You did poke out, right? So if you look at the express chart here, we did break this week last week's lows, and we continually tried to break it, and we couldn't. Okay, never came close to last week's highs. Last week's highs is also last month's highs. All right. So, and yesterday, that 390 has been resistance. Look at 390. It has not been able to break that. Now today, fortunately, it'll probably happen pre-market. But this 390 in the Qs, that is one hell of a short, like short covering, a squeeze, whatever you want to call it. If you break that, you're probably going to head up to 393, 392, most likely 393, because you have shorts just sitting there that have not been hurt. Okay, they've shorted it every time. That is the key level for today, 390 in the Qs. We're at 389.36 right now. We're right around here, the midpoint of yesterday. Okay, most likely around the most traded price. All right. So that's all what it's about today. Qs has that huge level it can break out of. Okay, and that's 358 in the SPY. Let's look at that. 458, 459. Now that has all this here. Can we get the blow off or a big move higher? Now I don't know. Then you got down here 454. Okay, down to the downside. Okay, because there's longs all been not hurt there. Shorts haven't been hurt. SPY's in that really small range. Qs are a little different. Okay, so that's what's going on there. All right, and we can look at the triple-headed monster before this news drops. So the 10-year yield, like I said, it's up 1.33%. So you can see we closed down here. Prices yields are here. So it's up a little bit. So 4.18. Okay. Might test this resistance here. We'll have to see. Okay. If this gets a push up, that's negative for stocks. Okay. Let's look at the dollar. The dollar is going to move on this data coming as well. So let's look at what really the dollar's been doing. So look, it's been down, 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 right here. We're in this little 2-day range here. It's pushing up right now, but obviously this news is going to change that. Okay, the VIX is just pretty much dead around 13. We're kind of, that's complacency, right? Not a lot of fear in this market. Okay, I did get that P call put call ratio reversal to the downside again, like a couple days now. So calls are being really bought at extreme levels. That's just an indication that they're extreme levels. It doesn't mean we can't go higher. Okay. Okay. I mean, we can go over to the marker profile. Okay, and look at the structure. We can also look at the news drop, what it does to the profile, and what we could do here. What we can do here, go to this view. All right, so we can look at this view. Look at the overnight session split out on both the Nasdaq and the ES. So this is the Nasdaq. That's what it's been doing, right? We can make this bigger to see what price does. Okay, those are just 30-minute bars. That's all a market profile is. It's 30-minute bars. It's nothing complicated, even though it looks crazy. Okay, we'll just make this big. Wait for this to drop. I'll also have an hourly chart of the ES up as well. We got 3 minutes. All right, so side by side, you got the Nasdaq and the ES. All right. Here's the most traded price of the month and the week, 45.70. That's been the magnet. Okay. Now see yesterday's midpoint right here. That's where price is. You can see in the Nasdaq right here is the mid of yesterday. Price is right at the midpoint of yesterday's move. We'll really have to see. We got news dropping in about a minute and a half. Go to the 60-minute chart. Hourly chart. You can see there's a trend line here that's been kind of honored in the ES. You can see the most traded price here of the month and the week. We'll see these numbers drop in about 45 seconds. You're already getting some volatility right now, and the numbers haven't even dropped yet. You can already see it. All right, news is dropping now. Push to the downside first. Push through the middle first. Okay. All right. So it's bearish news for non-farm payrolls. That is, they beat 199,000 jobs added. Okay. Consensus was 180. Forecast was 160. This is also bearish. The unemployment rate dropped to 3.7. 3.7. So, like I talked about before, unemployment got lower. That means the Fed has more work to do. All right. We added more jobs than expected. That means the Fed might have more work to do. All right. So the first move was a push down. This is bearish for right now. Okay. Unemployment went down 0.2. I don't think a lot of people expected that. Okay. Let's see. Average hourly earnings. Now we can look at this data together. Average hourly earnings month over month. Let's see. Forecast 0.2. So that average hourly earnings went up also 0.2. That was month over month. Average hourly earnings year over year stayed 4%. Okay. So this is bearish. Unemployment dropped 0.2 to 3.7. This is bearish. This is probably going to send the dollar higher. It's probably going to send 10-year yield. Yup, 10-year yields just went up 3.22%. This is not what the Fed wants to see. Okay? So now we're pushing through the most trader price. Okay? Now, what this most likely will happen, because we're in balance rules. Okay? Technicals still matter. They always matter. This is just a catalyst. Okay? So what's going to happen from here? You can talk about it right here. It's pretty simple. Okay, I'm gonna make this chart a little smaller so we can see the range. Okay. 30-year bonds, just to let you know, are down 1.27%. Okay. This is really key here. This area. That's the 45.70. That's the magnet. Price is here right now. Okay. Price is there right now. So here's that trend line that's been honored. Okay. You just took out all these longs. They just got hurt. Okay. Whoever thought the number was going to be bullish is now probably in futures selling. So what happens in balance, right? Let's just look at it. You go up, you go down. Go up, you go down, you go up, you go down. So now all these longs that went up here, right? What's going to happen? When you cross here, they are going to cover and you're going to test down here. You know, this market will never shock me. It does though. But what I'm saying is once you come up to the top of balance and you go back down through the most traded price, you are going to go back to the other side. And then it's a matter of, can the buyers buy this dip again, or are we going to finally break down? Okay. Now in the macro sense of the word, okay, the macro sense, there's no way any Fed or anything is going to look at this and go, oh, this restrictive policy is great. Unemployment's going down. You know, the Fed wants to see that number jump over 4%. You want to see it go up, right? You're adding more jobs and there's less people unemployed regardless of the inside the numbers. If you look inside the numbers, I know they're not good, right? If the market can shrug this off today, then it's crazy. But we already know that the market's crazy. But if it shrugs it off, because these numbers were not expected, unemployment was not expected to go lower. Okay. My guess is if we hang out in here, That's the area, right? Because, like I said, if you're long here, you're going to want to get out. And it's going to probably push the price down here. Okay, so this area is so important now that the numbers are out. Where are we at? Most traded price of the month and the week. Okay, you got a trend line here. Okay, most traded price of yesterday's right here. See how all that volume got taken out. Now this is an opportunity here. If this gets bid back up to the most traded prices yesterday in supply and this downtrend line, this is not, man, again, this is not bullish news. This could people really looking to suck people in here, and then boom, you roll over. Okay, no one's going to look at this and say, yes, the Fed's not going to hike, regardless of if they won't. It doesn't look good. Okay, I have no horse in this race, so I'm just going off of what everybody else would analyze this data as. Right, unemployment went lower, and we're at 5.25 Fed funds. Right, it's like crazy. All right, let's look over to the Nasdaq. Let's see the structure of the Nasdaq. Okay, what did it do? Of course, went down to the most traded price. I don't have to tout that uh, tout that all the time. Did I just close that? Okay. So here's the most traded price in the Nasdaq. Where did the price come right back down to? Right there. No surprise, right? All right. So you see, we do have an uptrend in the Nasdaq, right here. Okay. Where did we come to yesterday? This supply zone, right there. Supply was made here. You came up once, sold off. Came up again, sold off. Came up again, sold off. Came up again, sold off. Right? Hence the supply zone, hence the resistance, whatever you want to call it. Okay? Most traded price of yesterday, right here. This could have been everybody anticipating numbers that were not like today. Okay? So, name the deal here in the story here is the Nasdaq hasn't been in this beautiful range like the SPY has, but you have definitely an area of resistance here. Okay, the support was broken. Right here was support in the range for the Nasdaq. It was broken, and you've made higher lows since then. Okay, so you really need to come down here. All right, and now if we come back up here, like I said in the ES, you have resistance, the most traded price. This could roll over, test the most traded price, and guess what? You're also testing the uptrend. You break that, and you break this swing low and this demand, you finally can maybe try to get this gap that's not been fully filled yet. Okay, now all the scenarios that I'm talking about are going off that these numbers are not bullish. Okay, they're not. Can the market do what it wants? Yep. Can go right against what I'm talking about. Can go right against what I'm talking about. Okay. And you have to really go with what you're seeing. Right? Because I remember back in the day, I used to be like so hardcore into the numbers and be like, let's pick apart these numbers. They're fake. Well, it doesn't matter. Algos are set to the numbers that we see. It doesn't matter inside the numbers, the real economy. That does not matter. These numbers are matter. We do have an election year coming up. These numbers get revised later, and then it like doesn't matter because they get revised down. But that doesn't matter. We got to go off this data, okay? And this data, no way, is going to be bullish. The market could still go up because the market doesn't have to match. Main Street and Wall Street don't have to match. Remember, the market prices in. stuff for the future. It's a discount mechanism. Okay, so it prices stuff in 6 months ahead of time. So the market doesn't match Main Street. Main Street and Wall Street are not together. Okay, that's what makes the trading hard, right? Because you want to look at it like Main Street and Wall Street go to hand in hand. They don't. Okay, the market can move up while there's bad data, like it did this year. All right, we moved up when the Fed was hiking at the fastest pace they've ever did. Right, because it's priced in cuts. Now we have to see what happens here. But right now, if you look at this chart, that's the Nasdaq. All right. If we go back to the ES, let's look at it. Okay. Let's look at that long range, right? You see the range. Okay. Now, this would be really, now the market's starting to bid back up, right? It's crazy. But let's look at one thing before I go. Okay. We're bidding back up, but where? Into supply, into a demand zone. I mean, supply zone, into the most traded price of yesterday, right? Into this downtrend, into resistance at the top of the balance, and you have bearish news. Okay, and it doesn't mean that we can't go higher. Okay, but right now, like I just said that, so we don't know what the market's going to do. Okay, we don't know. We can look real quick at my market profile, and you can just see what the market has done in the market profile, right? Just 30-minute bars. You can see it ripped down through most traded price. You can see now we're back into this range up here, right? So, like I said, you just have to see. Right now, it's like when the news dropped, it's almost back to when the news dropped. Like I said, though, let's look at one important thing, okay? And again, this doesn't always mean it drives it today. And like I said, it makes it hard. 10-year yield was up a lot more just prior, okay? It's up 2.52%. It's at 4.2, right? Obviously, the news is bearish for the bonds, for yields, okay? Dollar up 0.39, right? That's usually not good for equities. Look at the VIX. What a weird VIX, right? You'd expect more fear, and it's down. That is weird. It's down 12. It's down to 12.82. Okay. Now probably spiked with this number. 30-year bonds are down 1.09%. Right. So in the bond market, it's pricing this in. It respects the bearish news. Okay. And this market is ripping right back up. Okay. It's ripping right back up. All right. So we'll have to see what happens with this when this market opens, because if it holds up into this area, okay, you really have to watch, because this could still be a bull trap. And the market, like, exactly. I wouldn't say that the market doesn't care yet. Okay. I wouldn't say that yet. We're coming right into resistance, and this could be the rug pull. I'm not saying the rug pull that we break down out of this bracket, but with the yields going higher, dollar going higher, this could be a bull trap where people think, uh-oh. Now, we could still go higher, but you just have to watch. All right? All right. That's going to do it for me today. All right? Subscribe, set an alert if you haven't already. I'm going to be, I like what the market's doing right now, because it's not blown out. It's not breaking out. It's going to, if it stays there, it's going to give me an opportunity to do something. Okay? I thought it was going to be breaking out by now or something. So, okay? Give me a like if you enjoyed the content. All right? Hopefully you did. All right? So I am going to analyze this market All right. I'm looking at this supply zone, right? If it holds, obviously, and there's some market weakness, well, I think we go down to the bottom balance. But I have to wait and see. All right. All right, everybody. Have a good day, and I'll see you guys next week. And have a good weekend.